Hello everyone, welcome to Let's Crack UPSC CSE English. In our crash course Inspire, we'll continue with center-state relations. Yes guys, now please enroll yourself for Unacademy Summit 2.0, which is a sequel to Unacademy Summit 1.0. So this is the sequel of our previous summit. So you can participate and you can enroll yourself through link provided in description box. So these are the two insightful days will help you for your UPSC preparation and will motivate you throughout the preparation phase. So do not forget to register yourself on Academy Summit 2.0 scheduled on 20th and 21st February. Yes, welcome to India's largest e-learning platform where you will get daily live classes, unlimited access for recorded and live lectures, structured courses will fulfill your dream, and after that during the preparation you can evaluate yourself through mock tests. Yes guys, we 100 plus top educators will guide you throughout the preparation. So download an Academy Learning app today and start your preparation. Let's crack it. Yes, it's me, Rishikesh Inamdar, having experienced more than 8 years in the field to guide UPSC aspirants. You can follow me on Unacademy, and for the daily updates, you can join our Telegram group using this link. Yes, as we have discussed, on our platform we have 15,000 plus courses, like there are module wise courses available: polity, governance and international relations, history, current affairs, geography, environment and ecology, Indian economy, and many more. So download the app and start your preparation. Yes, so for the subscription options, you have plus and iconic subscription where you will get 10% discount using referral code RBI Live. Yes, so you'll get 10% discount in the February using code RBI Live. These are the information related with our new batches. We are starting from 18th February. So it's 6 months batch, 1 year batch, 2 years batch, and NCERT batches for prelims. So friends, as per your convenience, you can join these batches. Right now, this is the combo courses available. You can opt as per your convenience, and again do not forget to use code RBI Live. Yes, those aspirants are planning to appear for the prelims in 2022 and 2023, they can go with the iconic subscription. You'll get huge discount in fees and use RBI Live referral code to get 10% discount. So friends, we'll start today's topic, center-state relations, where we'll just see the articles related with the administrative relations which we have covered in the last lecture, right? So article 256 deals with the obligation of states and the union. Article 257 deals with the control of the union over states in certain cases. Article 257A deals with the assistance to states by deployment of armed forces to or other forces of the union, which was repealed. Next article, Article 258, power of the union to confer powers, etc., on states in certain cases. Article 258A, power of the states to entrust functions to the union. So we are revising articles related to the administrative relations between center and state. Yes, friends. So Article 259 deals with the armed forces in states in Part B of the first schedule. This article was repealed. Okay. Next article, Article 260, jurisdiction of the Union in relation to territories outside India. Next article 261, public acts, records and judicial proceedings. Article 262, adjudication of disputes relating to waters of interstate rivers or river valleys. Article 263 describes provision with respect to an interstate council. So just remember these articles from 256 to 263 related with the administrative relations between center and states. Now further we'll see most important part, that is financial relations between center and state, right? So guys, here just remember article 268 to article 293 deals with the financial relations between center and states. So these articles mentioned in the part 12 of our Indian Constitution. Alright, so these articles and part deals with the financial relations between center and state. Yes, so in previous lectures we have studied legislative relations, administrative relations, and now today we'll see financial relations. Okay, so we'll start with the lecture where we'll cover these financial relations under these headings like allocation of taxing powers, distribution of tax revenues, distribution of non-tax revenues, grants in aid to the states, Goods and Services Tax Council, Finance Commission, protection of the state's interest, borrowing by the center and the states, intergovernmental tax immunities, and effects of emergencies. So we will see these all headings with these financial relations which complete the part financial relations between center and state. Yes. So now first, allocation of taxing powers. Yes friends. So the constitution divides the taxing powers between the center and states through few ways, like the parliament has exclusive power to levy taxes on subjects enumerated in the union list. Okay, so there are 13 are numbers these subjects, okay, where parliament has exclusive power to levy taxes on subjects mentioned in the union list. Next is the state legislature has exclusive power to levy taxes on subjects mentioned in the state lists. So these are the approx 18 subjects. Alright, next, there is no tax entries in the concurrent list. So which means the concurrent jurisdiction is not available with respect to tax legislation. Alright, but here is the catch. We have to just remember the 101st Amendment Act of 2016 has made an exception by making a special provision with respect to goods and services tax, as we know, that is GST. So this amendment has conferred concurrent power upon Parliament and state legislatures to make laws governing goods and services tax. Right. So this, we are studying the allocation of taxing powers between center and states. Next is the residuary powers or residuary power of taxation is vested in the Parliament. Under this provision, the Parliament has imposed gift tax, yes, wealth tax and expenditure tax. Right. So this is a power to impose taxes not enumerated in any of the three lists. So that is the residuary power of taxation is vested in the Parliament. So they can impose gift tax, wealth tax and expenditure tax. Right. Now the Constitution also draws a distinction between the power to levy and collect a tax and the power to appropriate the proceeds of the tax so levied and collected. Yes. So, example, the income tax is levied and collected by the center, but its proceeds are distributed between the center and the states. Alright. So, the Constitution has placed the following restrictions on the taxing powers of the states. So, we'll study these restrictions, like a state legislature can impose taxes on professions, trades, callings and employments, but the total amount of such taxes payable by any person should not exceed rupees 2500 per annum. Okay, so this is the first restriction. After that, a state legislature is prohibited from imposing tax on the supply of goods or services or both in the following two cases, like where such supply takes place outside the state. It means a particular goods supply takes place outside the state, so the state legislature is prohibited to imposing tax on that activity. And next, where such a supply takes place in the course of import or export. So where if this act or this procedure conduct under the import or export, yes. Now the Parliament is empowered to formulate the principles for determining when a supply of goods or services or both takes place outside the state or in the course of import or export. All right. Right. So it's discretionary power of Parliament. Yes. After that, next restriction is a state legislature can impose tax on the consumption or sale of electricity, but no tax can be imposed on the consumption or sale of electricity which is consumed by the center or sold to the center and consumed in the construction, maintenance or operation of any railway by the center or by the concerned railway company or sold to the center or the railway company for the same purpose. So here we can say the state legislature is imposing tax, or legislature can impose tax on consumption or sale of electricity, but there is no tax in case of that electricity is consumed or sell for the reason of like this particular electricity consumed by the center or sold to the center, and next consumed in the construction, maintenance, operation of any railway project which is handled by railway company or center or any authority related with that. Okay, so remember these points. And next restriction is a state legislature can impose a tax in respect of any water or electricity stored, generated, consumed, distributed, or sold by any authority established by parliament for regulating or developing any interstate river or river valley. Yes, so state legislature can impose a tax in respect of any water or electricity stored, generated, consumed, distributed, or sold by any authority established by parliament for regulating or developing any interstate river or river valley. But such a law to be effective should be reserved for the president's consideration and receive his assent. Alright, so just remember these points related with the restrictions on states for the taxing powers. Alright, yes. Now, after that, we'll see distribution of tax revenues. Yes, guys. I hope everyone is aware about 18th Amendment Act 2000 and the recent one, that is 101st Amendment Act of 2016. So these two amendments introduced in the parliament, and they related with the major changes in the scheme of distribution of tax revenues between the center and the states. Yes, so remember 18th Amendment Act and 101st Amendment Act. So 80 Amendment Act 2000 and 101st Amendment Act of 2016. So they are related with the scheme of the distribution of tax revenues between center and state. So 18th Amendment Act was enacted to give effect to the recommendations of the 10th Finance Commission. Alright, so the act was passed in 2000 on the recommendations of the 10th Finance Commission. So the commission recommended that out of the total income obtained from certain central taxes and duties, 29% should go to the states. Yes, so just remember recommendation of the 10th Finance Commission is that out of the total income obtained from certain central taxes and duties, 29% should go to the states. So this is known as the alternative scheme of devolution and came into effect retrospectively from 1st April 1996. Alright, now this amendment has brought several central taxes and duties like corporation tax and custom duties at par with income tax, taxes on income other than the agriculture income, as far as their constitutionally mandated sharing with the states is concerned. So this amendment deleted Article 272. So this 18th Amendment 2000 was deleted Article 272, which describes taxes which are levied and collected by the center and may be distributed between the center and the states. So this article was deleted through this amendment, 18th Amendment Act 2000. Now, next important is 101st Amendment Act 2016. Yes. So this is, just remember this important Amendment Act. Yes. 101st Amendment Act 2016 mentioned or introduce a new tax regime, that is goods and services tax, GST, in the country. Yes guys, now remember this Amendment Act, which is milestone with relates with the tax regime, right? So this amendment introduced GST, goods and services tax, in the country. Now, the amendment conferred concurrent taxing powers upon the parliament and the state legislature to make laws for laying GST on every transaction of supply and goods or services, or both goods and services. Yes. So the goods and services tax, GST, replaced a number of indirect taxes levied by the union and the state governments. So just remember this point, that is GST replaced a number of indirect taxes levied by the union and state governments. So is intended to remove cascading effect of taxes and provide for a common national market for goods and services. Yes, so this 101st Amendment provided submusing of various central indirect taxes and levies such as central excise duty, additional excise duties, excise duty levied under the medicinal and toilet preparation excise duties act 1955, service tax, additional customs duty commonly known as countervailing duty, special additional duty of customs, central surcharges and cesses so far as they related to the supply of goods and services. So similarly, the amendment provided for subsuming of state value added tax, and that is sales tax. After that, central sales tax levied by the center and collected by the states, octroi and entry tax, purchase tax, luxury tax, taxes on lottery, betting and gambling, and state surcharges and cesses insofar as they related to the supply of goods and services. Yes, so this amendment, 101st Amendment 2016, provided for subsuming of various central indirect taxes and levies like central excise duty, yes, central excise duty, additional excise duties, excise duty levied under the Medicinal and Toilet Preparation Act 1955 known as excise duties, service tax, additional customs duty commonly known as countervailing duty, special additional duty of customs, central surcharges and cesses so far as they are related to the supply of goods and services. Similarly, the amendment provided for subsuming of state's value added tax, sales tax, central sales tax levied and levied by the center and collected by the states, octroi and entry tax, purchase tax, luxury tax, taxes on lottery, betting and gambling, state surcharges and cesses is so far as they related to the supply of goods and services. So the amendment, so this amendment is deleted Article 268A as well as entry 92C in the union list. Both were dealing with service tax. Alright, so this 101st amendment deleted Article 268A and entry 92C in the, yes, so this amendment deleted Article 268A as well as entry 92C in the union list. Both were dealing with service tax, right? So they were added earlier by the 88th Amendment Act of 2000. So this is replaced by 101st Amendment Act, which means Article 268A and entry 92C was deleted from union lists. Yes. Now, the service tax was levied by the center but collected and appropriated by both the center and states. Yes. So the service tax is levied by the center and is collected and appropriated by both center and the states. Now next. Yes guys. So we are studying financial relations. Before that, once again, remember upcoming event Unacademy Summit 2.0 scheduled on 20th and 21st February 2021. So this will help you to boost your preparation and this summit will boost your motivational level for the preparation. Yes guys, we have iconic speakers and toppers. They will guide you and they will discuss on some issues which will help your or which will help to you boost your preparation. So register now. The link is available in description box. Use code RBI Live for the registration for Unacademy Summit 2.0. Now these are the iconic speakers. Yes, renowned and iconic speakers will guide you during Unacademy Summit 2.0. So hurry up and register yourself to attend Unacademy Summit 2.0. Yes. So these educators and our iconic speakers will guide you in the Unacademy Summit 2.0. Alright, now, yes. Now we'll continue with the financial relations discussion. So after these two amendments, 18th Amendment and 101st Amendment at present position with respect to distribution of tax revenues between the center and the states is as follows, like taxes levied by the center but collected and appropriated by the states under Article 268. This category includes the stamp duties on bills of exchange, checks, promissory notes, policies of insurance, transfer of shares, and others. So, the proceeds of these duties levied within any state do not form a part of the Consolidated Fund of India but are assigned to that state. Yes. So, these amendment acts with respect to the distribution of taxes revenues between the center and the states, like these taxes levied by the center but collected and appropriated by states mentioned in the Article 268. Alright, where this category includes the stamp duties on bills of exchange, checks, promissory notes, policies of insurance, transfer of shares, and others. So, the proceeds of these duties levied within any state do not form a part of the Consolidated Fund of India but are assigned to that state. Yes, next, taxes levied and collected by the center but assigned to the states. Mentioned in the Article 269. Yes, taxes on the sale or purchase of goods other than newspapers in the course of interstate trade or commerce, taxes on the consignment of goods in the course of interstate trade or commerce, and the net proceeds of these taxes do not form a part of the Consolidated Fund of India. They are assigned to the concerned states in accordance with the principles laid down by the Parliament. Alright, next. Levy and collection of goods and services tax in course of interstate trade or commerce, Article 269A. Yes, the goods and services tax GST on supplies in the course of interstate trade or commerce are levied and collected by the center. Yes, so GST on supplies in the course of interstate trade and commerce, which means, for example, there is trade between state A and state B. Alright, so the GST on these supplies are levied and collected by the center. Yes, but this tax is divided between the center and the states in the manner provided by the Parliament on the recommendations of the Gst Council. Yes, so under this provision, the GST is collected by the center, but this tax divided between the center and states, which is mentioned or recommended by the Gst Council. This provision is recommended by the Gst Council, right? So the Parliament is also authorized to formulate the principles for determining the place of supply and when a supply of goods or services or both takes place in the course of interstate trade or commerce. All right, next. Taxes levied and collected by the center but distributed between the center and the states. Yes, Article 270 describes these taxes levied and collected by the center but distributed between the center and the states. Yes, so this category includes all taxes and duties referred to in the union list except or exception for these taxes like duties and taxes referred to in Article 268, 269, 269A mentioned above, and surcharge on the taxes and duties referred to in Article 271 mentioned below, and cess levied for specific purposes. So the manner of distribution of the net proceeds of these taxes and duties is prescribed by the President on the recommendation of the Finance Commission. So the Article 270 deals with the taxes levied and collected by the center but distributed between the center and the states. Next, surcharge on certain taxes and duties for purposes of the center. Article 271. Yes. Yes, guys. So, Article 271 describes the surcharge on certain taxes and duties for the purpose of the center. So a parliament can at any time levy the surcharges on taxes and duties referred to in Article 269 and 270. Alright. So the proceeds of such surcharges go to the center exclusively. Yes, just remember, the surcharges go to the center exclusively. In other words, the states have no share. The states have no share in these surcharges. However, goods and services tax is exempted from this surcharge. So it means this surcharge cannot be imposed on GST. Yes, GST is exempted from this surcharge. Right. So it's all about Article 271 and provision under Article 271. Yes, next. Taxes levied and collected and retained by the states. Yes. If we'll see in the context of states, this is the important provision, that is taxes levied and collected and retained by the states. So these are the taxes belonging to the states exclusively. Yes, so they are enumerated in the state list and are 18 in number. So these are land revenue, taxes on agricultural income, duties in respect of succession to agricultural land, estate duty in respect of agricultural land, taxes on lands and buildings, taxes on mineral rights, duties of excise on alcoholic liquors for human consumption, opium, Indian hemp and other narcotic drugs and narcotics, but not including medicinal and toilet preparations containing alcohol or narcotics. Yes, so these are the taxes levied and collected and retained by the states, like land revenue, taxes on agricultural income, duties in respect of succession to agricultural land, estate duty in respect of agricultural land, taxes on lands and buildings, taxes on mineral rights, duties of excise on alcoholic liquors for human consumption, taxes on the consumption or sale or electricity. Yes. Next is the taxes on the sale of petroleum crude, high-speed diesel, motor spirit commonly known as petrol, natural gas, aviation turbine fuel, and alcoholic liquor for human consumption, but not including sale in the course of interstate trade or commerce, or sale in the course of international trade of or commerce of such goods, like, right. So these are the taxes on the sale of petroleum crude, high speed diesel, petrol, natural gas, aviation turbine fuel, and alcoholic liquor for human consumption, except the interstate trade or commerce, right, of these activities. Next, taxes on goods and passengers carried by road or inland waterways. Yes, these taxes levied, collected, and retained by the state. Taxes on vehicles, taxes on animals and boats, tolls, taxes on professions, trades, calling and employments, capitation taxes, taxes on entertainments and amusements, to the extent levied and collected by a panchayat or a municipality or a regional council or a district council. Stamp duty on documents except those specified in the union list. So stamp duty on documents is under states. Fees on the matters enumerated in the state list. So fees related with the matters mentioned in the state list, okay, which is except court fees. All right. So these are the taxes levied and collected and retained by the states. Yes, land revenue, taxes on agriculture income, duties in respect of succession to agriculture land, estate duty in respect of agriculture land, taxes on lands and buildings, taxes on mineral rights, duties of excise on alcoholic liquors for human consumption, taxes on the sale of petroleum products, taxes on goods and passengers carried by road or inland waterways, taxes on vehicles, animals and boats, tolls, taxes on professions, trades, callings and employments, capitation tax, taxes, taxes on entertainment, amusement, stamp duty on documents, right, except specified in the union list, and fees on the matters enumerated in the state list, except court fees, right. So now continuation with this, entry 52 and 55 were omitted by the 101st Amendment Act 2016. So entry 52 related with the taxes on the entry of goods into the local area for consumption, use or sale therein, and entry 55 describes taxes on advertisements other than advertisements published in the newspaper and advertisements broadcast by radio or television were omitted by the 101st Amendment Act 2016. Yes. Next, distribution of non-tax revenues. Yes, so in financial relations, we are studying various aspects and relations between center and states, where now we'll study distribution of non-tax revenues. So first we'll study about the center. Yes. So the receipts from the following forms the major sources of non-tax revenues of the center, like posts and telegraphs, railways, banking, broadcasting, coinage and currency, central public sector enterprises, estate and lapses, and others. Alright, so these are the major sources of non-tax revenues of the center. And if we are discussing about the states, then irrigation, forests, fisheries, state public sector enterprises, estate and labs, and others are the major sources of non-tax revenues of the states. Yes, so these are the non-tax revenue sources of the center, and these are the non-tax revenues sources or major sources of the states. Yes, friend. Now, after that, we'll see grants in aid to the states. Yes. So, sharing of taxes between the center and the states, the Constitution provides for grants in aid to the states from the central resources. So, there are two types of grants in aid, right? So, first is statutory grants and second is discretionary grants, right. So the statutory grants, which is mentioned in article 275, so article 275 empowers the parliament to make grants to the states which are in need of financial assistance and not to every state. Yes guys, so article 275 empowers Parliament to make grants to the states which are in need of financial assistance, but not to the every state, right? So different sums may be fixed for different states, and these sums are charged on the Consolidated Fund of India every year. Okay, so definitely during the course we'll study Consolidated Fund. Alright, now apart from this general provision, the Constitution also provides for specific grants for promoting the welfare of the scheduled tribes in a state or in raising the level of administration of the scheduled areas in a state, including the state of Assam. Right. So the statutory grants under Article 275, both general and specific, are given to the states on the recommendation of the Finance Commission. Yes. So it's all about statutory grants. Now, discretionary grants. Yes. So Article 282 empowers both the center and the states to make any grants for any public purpose, even if it is not within their respective legislative competence. So, under this provision, the center makes grants to the states, right? Under discretionary grants. So, we can say the grants are also known as discretionary grants. The reason being that the center is under no obligation to give these grants, and the matter lies within its discretion. So these grants have a twofold purpose: to help the state financially to fulfill planned targets, and to give some leverage to the center to influence and coordinate state action to effectuate the national plan. All right, yes. Now, we'll study other grants. Yes. So, the Constitution also provided for a third type of grants in aid, but for a temporary period. So, a provision was made for grants in lieu of export duties on jute and jute products to the states of Assam, Bihar, Odisha, and West Bengal. So, these grants were to be given for a period of 10 years from the commencement of the Constitution. So, these sums were charged on the Consolidated Fund of India and were made to the states on the recommendation of the Finance Commission. Yes, so these are the other grants, right, for a temporary period. So basically this provision was made to grants in lieu of export duties on jute and jute products to the states of Assam, Bihar, Odisha, and West Bengal. Yes, now next. After these grants, we'll study Goods and Services Tax Council. Yes. So friends, as we are studying during our current affairs section or under current affairs section or daily through newspapers, there is mention or work of this GST Council is mentioned. The specific word GST Council is mentioned in number of articles or news related with the GST. So what is this council? What is their work? So we'll study all those details. Like, for as we have studied the enactment of GST tax by the Parliament, now there should be a smooth and efficient administration of GST. So for that, cooperation and coordination between center and state is required. Alright, now for that we introduce this GST Services Tax Council. So the 101st Amendment Act 2016 provided this establishment of GST Council. Alright, now Article 279A impart the President to constitute a GST Council and order. So, Article 279A Clause 1 says that the President shall, within 60 days from the commencement of the Constitution, 101st Amendment Act 2016, by order constitute a council to be called Goods and Services Tax Council, that is GST Council. Yes. So, the council is a joint forum of the center and the states. Yes, it required to make recommendations to the center and the states on few matters like the taxes and cesses and surcharges levied by the center and states and local bodies that would get merged in GST. Yes, so the goods and services that may be subjected to GST are exempted from GST. Model GST laws, principle of levy, appointment of GST levied on supplies in the course of interstate trade or commerce, and the principle that govern the place of supply. Next, the threshold limit of turnover below which goods and services may be exempted from GST. The rates including floor rates with bands of GST. Yes, any special rate or rates for a specified period to raise additional resources during any natural calamity or disaster. Yes. So, a GST Council is a joint forum of the center and the state. Okay. Yes. So, they required to make recommendations to the center and states on few matters like the taxes and cesses on surcharges levied by the center and the states and local bodies that would get merged in GST. Goods and services that may be subjected to the GST or exempted from GST. Model GST laws, principle of levy, appointment of GST levied on supplies in the course of interstate trade or commerce, and the principle that govern the place of supply. The threshold limits of turnover below which goods and services may be exempted from GST. The rates including floor rates with bands of GST. Any special rate or rates for a specified period to raise additional resources during any natural calamity or disaster, like few sectors demanding waiver of GST during the pandemic of corona. So these are the recommendations, or they make recommendations with the help of center and state. So it will recommended by GST itself. So GST Council will discuss all these recommendations. Alright, now after the GST Council, Goods and Services Tax Council will study Finance Commission. Yes, so Article 280 Article 280 of our Indian Constitution provides for a Finance Commission as a quasi-judicial body. Yes, it's a quasi-judicial body and constituted by the President every 5th year or even earlier. So, it required to make recommendations to the President on following matters. So, Finance Commission is making recommendations or is required to make recommendations to the president on the matters like the distribution of the net proceeds of taxes to be shared between the center and the states, and the allocation between the states and the respective shares of such proceeds. Next, the principles which should govern the grants in aid to the states by the center out of the Consolidated Fund of India. Yes. Next, the measures needed to augment the Consolidated Fund of a state to supplement the resources of the panchayats and the municipalities in the state on the basis of the recommendations made by the State Finance Commission. Yes, so this function was added by the 73rd and 74th Amendment Act 1992, which have granted constitutional status on the panchayats and municipalities respectively. Alright, so the measures needed to augment the consolidated fund of a state to supplement the resources of the panchayats and the municipalities in the state on the basis of the recommendations made by the State Finance Commission. Yes. So any other matter referred it by the president is in interest of the sound finance. Till 1960, the commission also suggested the amounts paid to the states of Assam, Bihar, Odisha, and West Bengal in lieu of assignment of any state or any share of the net proceeds in each year of export duty on jute and jute products, right? So till 1960, commission suggested the amount paid to these specific states which share the net proceeds in each year of export duty on jute and jute products. So the constitution envisages the finance commission as a balancing wheel of fiscal federalism in India. Yes, friends, just remember this point where you can mention in the answer writing part as well. So the constitution envisages the finance commission as the balancing wheel of fiscal federalism in India. Right. Now next, protection of states' interest. So to protect the interest of states in the financial matters, the constitution lays down few bills can be introduced in the parliament only on the recommendation of the president. So a bill which imposes or varies any tax or duty in which states are interested, a bill which varies the meaning of expression agriculture income as defined for the purposes of the enactment relating to the income tax, Indian income tax, a bill which affects the principles on which monies are or may be distributable to states, a bill which imposes any surcharge on any specific tax or duty for the purpose of the center, the expression tax or duty in which states are interested, means a tax or duty the whole or part of the net proceeds whereof are assigned to any state, or a tax or duty by reference to the net proceeds whereof sums are for the time being payable out of the consolidated fund of India to any state. Right. So the phrase of net proceeds means the proceeds of a tax or a duty minus the cost of collection. So the net proceeds of a tax or a duty in any area is to be ascertained and certified by the CAG, Comptroller and Auditor General of India, and his certificate is final. So it's all about protection of states' interests. Yes, next is borrowing by the center and the states. Yes. So the constitution makes the few provisions with regard with the borrowing by the center and the states. So the central government can borrow either within India or outside upon the security of the consolidated fund of India, or can give guarantees, but both within the limits fixed by the parliament. So far, no such law has been enacted by the parliament. Similarly, a state government can borrow within India and not abroad upon the security of the consolidated fund of the state, or can give guarantees, but both within the limits fixed by the legislature of the state. Yes, the central government can make loans to any state or give guarantees in respect of loans raised by any state. Any sums required for the purpose of making such loans are to be charged on the consolidated fund of India. A state cannot raise any loan without the consent of the center if there is still outstanding any part of a loan made to the state by the center or in respect of which a guarantee has been given by the center. Yes. So basically the central government can borrow the particular amount or funds within the India or outside upon the security of the consolidated fund of India, or they can give guarantees both within the limits fixed by the parliament. So this is all about borrowing by the center and the states. Yes. So in financial relations, article 268 to 293 under part 12, we studied few provisions and acts where is it mentioned the powers between center and state related with the financial relations. Now, in the next lecture, we'll continue with the remaining part of financial relations. Yes, there are a few commissions we will study in the next lecture. So, till the time you can revise the theoretical part of these financial relations, we'll continue remaining topics in the next lecture. So here, friends, enroll yourself and register yourself for Unacademy Summit 2.0, which is a sequel to Summit 1.0, right? So this summit and participation in this summit will help you with the CSE preparation, and which will motivate you for the achieving your goal. Yes, so these 2 days will transform your knowledge and it will help throughout your civil services preparation. Yes, in this summit sessions, there are scheduled sessions by iconic and renowned speakers and top educators. They will share their strategy and tricks with you guys. So do not forget to attend Unacademy Summit 2.0. Right. After that, next event is Unacademy Combat, scheduled on 20th February in the morning 11 o'clock. So again, along with Unacademy Summit 2.0, you can enroll yourself for Unacademy Combat also using code RBI Life. Alright, so use this code and enroll yourself. So friends, links for these both events available in the description box, and there is no any charges for these events. Even for the Summit 2.0 or Unacademy Combat, there is no any fees or charges. It's a free of cost. So it's a request to attend these both events, Summit 2.0 and Combat. Yes. So in this combat, according to ranks, you will get prizes like complimentary Unacademy Plus subscription, 75%, 50% or 25% discount on the subscription, and many more. So hurry up and enroll yourself. Yes friends, so till the time you can like, share and subscribe our channel and share our videos as well. You can join our Telegram group using this link. Yes, so remember the referral code RBI Live to get 10% discount on the subscriptions as well. So till the next lecture, keep revising, keep studying, and all the best. Thank you.